One of the most important things that people are debating is the SpaceX and Tesla merger. There's a lot of rumors about it, and people are very excited. Some are nervous, some hate it, some love it. I want to take a perspective here that is very important for a lot of Tesla investors who follow my strategy of sometimes putting on a lot of leaps, no pun intended, because they're calls. Leaps are call options that are long running, for on Tesla, because we're betting on Tesla going to the moon at some point in the next 12 months, 18 months. And the advantage of leap options is if Tesla trades at 300, whatever it is, 70, right now you can buy a leap option out of the money, let's say 500 strike price, get it relatively cheap, even though it's pretty expensive. Buy it with an expiration date of end of next year, for example, December 2027, and have a lot of time. If you pay 60, 80 bucks for that, you break even at 580. So everything above 580 gives you a huge multiple compared to holding shares. And you do that, or I do it, when Tesla drops too much, I'm out of capital, I roll stocks into leaps, and that normally works very well. If you have enough time, that's why it's leaps. You take a lot of time, right, to keep them, because you can never predict short-term market moves, but long-term, there's a lot of forcing functions that would drive Tesla much higher than it is now, in my opinion, at least. Now, why is this so important? Tesla boomer mama, Alexandra Mertz, who's one of the most sophisticated insiders, I shouldn't say insiders, but someone who really understands well the legal part of things and also the shareholder vote behavior and the board behavior of Tesla and potentially also of SpaceX. She had an interesting commentary on the most likely SpaceX Tesla merger timeline. And what she said in a nutshell is it could happen this year. It could happen. There's a theoretic chance, and she outlined the process, Tesla shareholder approval and all these things. But she said it's unlikely, because very likely the regulators will have a say in it. And regulators reviewing a giant merger like this take 12 to 24 months. And of course, Tesla is not allowed to merge if the regulators are not allowing it. So the bottom line is we don't know exactly, but there is a tail risk that it's faster than we think. Why is this even important? Well, let me read my tweet where I basically described a very important problem. And if you know something or have other types of option contracts, let me know in the comments, or if you disagree with some speculation I have here, how these are being treated in terms of a merger. But this is a very important insight if you are a long-term call option holder, because there is some real risk here. So let's read it. There is, in my opinion, a low double-digit % probability that Tesla and SpaceX merge this year. And this is because of Alexandra Mertz and her assessment, which I agree with. It is unlikely, but there's still double digits, like 10, 15% chance it actually happens this year, which is non-trivial. If Tesla would turn into SpaceX, right, it's a merger. One stock gets acquired by the other stock, but we don't know which one. That's another speculation we can have. Is Tesla going to acquire SpaceX, or is SpaceX going to acquire Tesla? Non-trivial question for options holders. So if Tesla would turn into SpaceX, right, if SpaceX acquires Tesla and Tesla stocks disappear, and you hold leaps above the acquisition merger price, you lose your capital, right? We have to understand that. So what happens if SpaceX buys, for example, or I'll give you an example here in the post. So if you have far out of the money calls for 2027, right? Let's say December 2027. And let's say you picked a high strike price, like 800, which is not a crazy thing to do, in my opinion. I'm pretty confident, like extremely confident, actually, that Tesla will be over 800 by end of 2027. Not a guarantee, of course, but that's what I would definitely be betting on. And the acquisition happens at 700, you just lose. Because what normally happens in a merger, when a company gets acquired, these options accelerate. So if your company, where you have a call option on 800, gets acquired for 700 before the expiration, normally you accelerate the expiration date and you get paid out whatever you are owed based on the option. But if your strike price is 800 and you get acquired at 700, you lose. You're out of, you're dead. You get zero. So that is a real risk. Because even if Tesla gets a significant premium at the acquisition, it's not going to get 800 if it's at 400, right? If, on the other hand, Tesla acquires SpaceX, so Tesla, SpaceX stock, also public, and Tesla acquires SpaceX, that should not matter too much. Because that just means a massive share dilution of Tesla. Tesla would basically issue tons of shares, like a lot of shares, to kind of acquire SpaceX, because now you have to give Tesla shares to all the SpaceX shareholders. You exchange SpaceX shares with Tesla. Tesla shareholders wouldn't even, notice it too much. Massive share dilution, by the way, doesn't mean a drop in share price necessarily. It depends how the market views this whole thing. Could even go up, maybe. But it's a massive expansion of outstanding shares with no impact on the options, at least to my knowledge, in my assessment. In this case, you should be fine, assuming after that Tesla continues to go up and doesn't get dragged down, right? So this is a different risk. If Tesla eats up SpaceX, and let's say SpaceX has a hard time scaling into massive amounts of cash flow, massive meaning similar to Tesla, we don't know how the market judges this whole thing. And that's another concern Tesla shareholders have, that an acquisition of SpaceX would potentially drag out this inflection point. Because now you carry a massive weight. You're going from a $1.5 trillion company to a $3 trillion company or more, $3.5 trillion company, but adding only small amounts of cash flow because SpaceX has much less cash flow than Tesla. Of course, you're doing so in exchange for a massive future cash flow where SpaceX could easily overtake Tesla. But that's pie in the sky again. So we don't know how the market is going to react to that. Many concerns here. Of course, I am more bullish on SpaceX than I am on Tesla. And that is not because I'm not extremely bullish on Tesla, but because SpaceX is just ridiculous. Like, that plan with SpaceX is just crazy. It's insane. Not because Elon is crazy, but because of the exact opposite, because Elon is extremely not crazy. Elon spotted a glitch in the matrix, let's face it. Elon spotted that we can build a Dyson sphere. Like, people don't totally understand. It's like millions of times the size of the human economy. And it's profitable from day one. So you're opening up a TAM that is millions of times larger than the entire human economy. Millions of times. But it's also not requiring any significant investments because it's cash flow positive from day one. It's literally a glitch in the matrix. It's absolutely nuts. And the whole thing is probably one of the easiest things Elon has ever done. So it's a triple glitch. Infinite TAM, instant cash flow positivity, and easier than EVs, easier than FSD, easier than Optimus, and definitely easier than Starship. That is how I see it. That's just nuts what's happening. It's just the ultimate opportunity. Why is this all happening? Because of AI. That is the randomness that has nothing to do, or not much to do, with Elon, that we are in this AI trajectory. AI unlocks the Dyson sphere. Plus, of course, Starship. That's also a great coincidence that Elon is just ready to deploy Starship, hopefully. So it's just ridiculous. This is like an enormous thing. I mean, enormous is not even cutting it. You guys understand what I mean. So that is how I see it. So besides this crazy, crazy story we just covered in a different video, the AI satellites and SpaceX story, that's a very tactical take on the options. And it's very, very important for all of us who actually have leaps. I do think this is a risk that I don't want to take. Because normally when let's say Iran escalates even more, which could be, and let's say Tesla drops below 300, which absolutely could happen, by the way. Different video, but this can absolutely happen in the next couple of months. Not because Tesla has any problems. Well, if Tesla has on top of it robotaxi problems, could drop more. but it could just drop under 300 because of a market crash, which is absolutely in the cards if this stuff continues. So let's assume that happens. I would go all in into leaps, into very out of the money leaps. Like I made the most money with my $700 and $600 leaps back last year when it went down to 220. And I bought a lot of leaps. I rolled over 50% of my entire stock portfolio into Tesla leaps. That's why I outperformed so much last year. But I would not do that in this situation. I'm still fine with buying leaps, but not that much out of the money and definitely not that much of my portfolio because of that tail risk. I don't want to have a 15 or 10% chance of losing all my money because of a merger. So it is non-trivial, this inside here. I would be willing to lose, 5% of my money or something because it's unlikely to happen, but not that amount of money I put in back then. So we have to keep that in mind when we play with leaps. Obviously, your risk for the leaps goes down with a lower strike price. If Tesla is at 300, let's say 350, and you buy a 400 or 450 strike price, that's pretty safe because you're very likely going to be in the money if the merger happens. So I would say it's a small chance that you get into trouble. But if you get into trouble because the merger happens exactly that way and at a surprise speed, you just get knocked out. That's the problem. So sometimes we have to cover options and these risks. I hope that was helpful and see you next time.